Hello, and welcome back to Explain the Charts, your go-to channel for in-depth technical analysis. Today is November 28th, 2025, and we are breaking down the complex picture for Amazon stock, symbol Amazon. The stock has been incredibly volatile lately, caught between some very compelling bullish and bearish narratives. On one side, we have major concerns about massive spending on artificial intelligence, new debt, and growing regulatory scrutiny. But on the other, we have the powerful tailwinds of the holiday shopping season and a massive new government contract for its AWS cloud division. Let's start by unpacking the recent news that has been driving this price action before we dive into what the charts are telling us. The primary concerns began circulating in mid-November, sparking a significant sell-off. Analysts at Rothschild Redburn downgraded the stock from buy to neutral, citing worries that the immense capital required for generative AI might not produce the same high-margin returns as earlier cloud investments. This concern was amplified when Amazon announced a $15 billion bond sale, its first since 2022, to help fund these very expenditures. This confirmed to the market that the AI arms race is expensive, raising questions about future free cash flow. Adding to the pressure is the regulatory environment, with the EU investigating AWS under the Digital Markets Act and the lingering effects of a multi-billion-dollar FTC settlement from September. These factors combine to create a perfect storm of fear, uncertainty, and doubt among investors. However, the bull case has recently received a major shot in the arm. Just a few days ago, Amazon announced a plan to invest up to $50 billion to expand its AI and supercomputing capabilities specifically for U.S. government clients. This move helps solidify AWS dominance in the highly secure and lucrative government sector and signals a clear path to monetizing its AI investments. The market reacted positively to this news, helping the stock bounce off its recent lows. We also cannot forget that we are in the midst of the Black Friday to Cyber Monday shopping weekend, a critical period for Amazon's retail segment. Strong consumer spending data could easily shift the narrative back in favor of the bulls. Now, let's see how this battle between fear and opportunity is reflected on the daily chart. Looking at the full daily chart, we can see that despite the recent sharp correction, the broader long-term uptrend from the lows in April remains intact. The stock set a 52-week high of $258.60 on November 3rd, and this level now stands as the most significant psychological and technical resistance to overcome. The subsequent pullback was sharp, taking the price from that peak all the way down to the $217 level around November 20th. As the news reports highlighted, this drop coincided with the stock breaking below its 50-day moving average, a key technical sell signal for many traders. Based on the chart and historical price action, we can identify a critical support zone between $205 and $208. This was an area of consolidation right before the strong Q3 earnings report propelled the stock higher, making it a logical place for buyers to step in if the price falls further. The ultimate floor for this entire structure is the 52-week low down at $161.38, but that is a long way from the current price. Let's zoom in on the action since late October to see this recent volatility more clearly. Here you can see the massive gap up at the end of October following their very strong Q3 earnings report, a move that took the stock from around $222 to over $250 in just a couple of days. The price peaked at $258.60 on November 3rd before reversing. This sharp decline from mid-November directly correlates with the news about the bond sale and the analyst downgrade we discussed. You can see the price fell from around $244 to a low of $217 in about a week. The bounce we've seen this past week started right from that $217 support level, lining up perfectly with the positive news about the AWS government contract. This $217 to $220 area has now become a crucial short-term support level to watch. Now, let's switch over to the 1-hour chart to get a better sense of the current short-term momentum. Here we can clearly see the bounce off the lows near $222 earlier in the week. The price has since rallied to its current level around $229. From this perspective, the stock appears to be trying to carve out a bottom and reverse the recent downtrend. The key immediate challenge for the bulls is the resistance zone between $232 and $235. This area acted as support during the breakdown, so it's expected to now act as resistance on the way back up. For a bullish continuation, we need to see the price decisively break above $235 and hold those gains. If it fails here and rolls over, it suggests the sellers are still in control in the short term. Finally, taking a quick look at the 15-minute chart shows us the intraday price action from the last couple of days. As you can see, the price action on November 26th was very choppy and sideways, trading in a range between roughly $228.77 and $231.74. This tight consolidation shows a state of equilibrium and indecision in the market. Traders are essentially waiting for the next catalyst, which could be holiday sales figures or more news on the AI front. A breakout above this range, particularly above $232, could spark a quick move higher. Conversely, a break below the recent support around $228 could signal that the price is heading back down to retest the lower support levels. So, to recap everything, let's go back to the daily chart. The key price levels to watch are critical. Major resistance is at the all-time high region of $250 to $259. Near-term resistance is the $232 to $235 zone. A break above this is bullish. The current price is hovering around $229, right in the middle of the recent range. Immediate support is at the recent low of $217, with a stronger support zone down at $205 to $208. So, what are the potential scenarios? Our bullish scenario, which I would give a 55% probability, is that positive holiday sales news and continued optimism about AWS long-term AI strategy pushes the price through the $235 resistance. If that happens, a move back toward $250 becomes very likely. This would be reinforced by any positive updates from the upcoming AWS re:Invent conference. Our bearish scenario, with a 45% probability, is that the market remains focused on high spending and margin compression from AI. If the stock breaks below the $217 support, it would signal renewed selling pressure, likely driving the price down to test the $205 to $208 support zone. A broader market downturn or negative regulatory news would increase the likelihood of this scenario. Keep a close eye on those key levels and the incoming retail sales data. Thank you for watching this analysis on Explain the Charts. Please remember, this video is for informational and educational purposes only and should not be considered financial advice. Trading and investing involve risk, and you should always conduct your own thorough research and consult with a certified financial professional before making any investment decisions. If you found this breakdown helpful, please hit the like button, subscribe to the channel, and turn on notifications so you don't miss our next video.